President Trump has unveiled his reciprocal tariffs, and the stock market is having a very negative reaction. So here's what happened, and you could see this on the White House's website. So Wednesday, April 2nd, after the stock market closes, President Trump announces the details of his reciprocal tariffs. So it says that President Trump is invoking his authority under the IEEPA to address this national emergency within trade relations. So it proceeds to say that a 10% tariff will be imposed on all countries. And this is going to take effect on April 5th. So President Trump will place additional tariffs on certain countries, which will go into effect April 9th. But President Trump will have the power to remove these tariffs when he feels that the problem is satisfied or resolved. And here it says that if countries retaliate with their own tariffs, then President Trump is allowed to retaliate back with even more tariffs. And here it says that some specific products will receive exemptions. Now, I'm going to show you this video clip of President Trump explaining the situation, and it's going to be a 2-minute clip. It was much longer. You're going to see a chart involved, but we're just going to keep it to 2 minutes. So please take a look.
I'd like to see the chart if you have it. Could you bring it up, Howard? This is our great Secretary of Commerce, Howard Lutnick. Thanks, Howard. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46%, and much higher for certain items like cars, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough.
Okay, so you just saw that. President Trump kept going on. He was going down the list, but I think you get the picture. Okay, so why is President Trump doing reciprocal tariffs? It's because, well, the primary reason is that he wants to create a manufacturing revival in the United States of America. But of course, there will be consequences to President Trump's reciprocal tariffs, which include, but won't be limited to, higher inflation. So that's undeniable. It's just a question of how bad will inflation get, or how much will it worsen inflation. Best case scenario is that it's short term, or if you want to use the Federal Reserve's favorite word, the inflation will be transitory. Worst case scenario, it's not so much transitory. And how much economic damage will this cause? Will this trigger a recession? Will this trigger stagflation or not? And you have to think about the debt crisis. How much is this going to worsen the situation? Like if we go into a recession, Just think of those metrics that are used, such as debt to GDP, because if the economy crashes, then debt to GDP is obviously going to skyrocket up. And how much turmoil is this going to cause in the financial markets? And we're not just talking about the stock market, but the bond market as well. And of course, how are other countries going to retaliate? And will this trigger a very large trade war? And with how many countries? So it's a question of trade-offs. How much manufacturing will be revived in the United States of America and how quickly? Compared to, how much higher will inflation go? How much economic damage will this cause? How much will this worsen the debt crisis? And how much is the stock market going to go down? And how are other countries going to respond? So there's a lot of unknowns, but please let me know what you think. Now, in terms of the stock market, you could see the consequences in real time for yourself, but then there's always the question of how much more downside is this going to cause, directly from the tariffs. Regarding inflation and the labor market, Federal Reserve members are saying, what is widely expected, that these tariffs will reduce jobs and raise inflation. So preliminary estimates are being thrown out there that CPI headline inflation is going to jump by a full percentage point very soon. And that's not good for the stock market, because if inflation spikes up, then that's going to prevent the Federal Reserve from cutting interest rates and loosening up their monetary policy. So the market expectation, according to the CME Fed Watch tool, is that there's a 91.1% chance that the Federal Reserve will not cut interest rates at their next meeting in May. So before President Trump delivered his plan, this was at 81%. And of course, another main objective of these reciprocal tariffs is to, and this would be the best case scenario, is if other countries, they don't want to be subject to these new tariffs, then they would remove their tariffs, and then President Trump would remove these new tariffs. So we end up in a situation where there's actually less tariffs than when we started. But of course, that's going to depend on whether the other countries, whether they're going to choose to go escalate or de-escalate. And it's going to be a country by country thing. But listen, I'll be the first to admit that I did not expect President Trump to go through with universal tariffs, because that is a very risky move for the reasons that we covered. You see the consequences in the stock markets, but the economy, the labor market, as well as inflation. Americans, we are struggling as is before this whole situation, but now expect that spike in prices. How are people going to deal with this? I guess, we'll just have to see. However, this might be short-lived. So honestly, nobody knows how the situation is going to unravel, because we've seen President Trump's policy, green light, red light, on and off, on and off. So we don't know. When it comes to the stock market, my approach, it's still the same. Patience is key. These dips, to me, they're buying opportunities, but I would not go all in. I would just dollar cost average in, but not go all in, because there could be more downside risk, as I said in my previous video. But that's all for today. I'll keep you updated. Please subscribe. I thank you for the support and wish you a very nice day. Take care.